Welcome to the latest Motley Fool scoreboard. I'm on in Chocolate, and we've got longtime fools, Jason Hall and Matt Frankel, giving a 1 to 10 rating to a home builder that even its bulls seem to have mixed feelings about. It's Dreamfinders Homes, ticker symbol DFH. Matt, how do you rate the strength of Dreamfinders business, including factors like industry and competition? 10 is invincible, 1 is hopeless.
I'd say 8, and to be fair, it's a combination of Dreamfinder's business and just a great environment for home builders right now. They do have a large presence in some of the fastest growing and most exciting housing markets in the U.S. They're based in Jacksonville. They're actually the official builder of the Jacksonville Jaguars. They're in the Carolinas, where I am. They're in Georgia. They're in Texas. Really attractive markets. Higher mortgage rates have created a really favorable environment for home builders. We can get into why later. They have a backlog of over 4,200 homes, great margins right now. But at the same time, that high exposure to Florida is a little scary. Estimates say that the recent storms are going to cost home builders in Florida about $2 billion in damages and things like that. So
I rated it a 7, and I own Dreamfinders Homes. I think that's important to mention here because Matt and I are going to diverge a little bit on this one. Dreamfinders has definitely benefited a ton from industry tailwinds and fortunate timing. Honestly, I could name a half dozen home builders that I think are better operators.
Slow your horses. We got Toppet coming up. We'll get there. Let's talk management in the meantime, Matt. 10 is Warren Buffett, 1 is Homer Simpson.
Yeah, I say a 9 just because of, it's really impressive that one person essentially built this business. Starting in the financial crisis, it was founded. Built it from like 9 homes in his first year to about 8,000 this year. That's CEO Pat Zalewski, who was the founder. Still owns 2/3 of the stock, which you really don't see that in the public markets too much.
Yep.
Modeled it after NVR, which you can argue whether or not that's a fair comparison. But he does consider himself, I had him on Industry Focus a long time ago. He considers himself to be primarily a capital allocator as his primary job. And he has a good track record of doing that. I'm going to jump the gun on something Jason has on the list, but he recently bought a mortgage originator. That's a really good move. He recently started buying back shares. Not afraid to, aggressively pursue acquisitions if they're going to be accretive. My biggest negative is that he doesn't communicate as much with investors as I'd like. The last annual letter on their website's from 2022. There have been only 2 non-earnings press releases this year. So that's my biggest negative.
Yeah, I rate management a 7 here. Zalewski's done really well for himself. I also think he's young too, and I think has a potential really long tenure ahead of him. But the NVR comp is overplayed. It really is. The bottom line is Dreamfinders is not unique. Using options, the land light model, basically everybody does that to some degree now. I do think it's smart. The mortgage banking subsidiary is a smart thing. It's diversification. That's one thing that NVR has done too. That it's smart. Bottom line, the balance sheet's not a strength. This is a pretty leveraged business. We'll talk about that in a minute. And all of the growth on the front side of the cycle that looks great could put the company in a really bad situation, depending on how the cycle does turn and when that happens.
Yeah, if you go to their investor relations page, by the way, you all were talking about how Zalewski is such a big part of the company. There's only 3 people listed. You go to some, you'll get like the entire company or, like dozens of people. It's impressive. Let's talk about financials, Matt. 10 is a fortress, 1 is yikes.
I'd say a 7, but again, a combination of the company and just the environment right now. They have a lot of liquidity, almost $500 million of liquidity in that asset-light model. It's led to really impressive returns on equity, 33.5% over the last 12 months. And the debt load, I wouldn't call high. I wouldn't call it an alarming amount of debt, but it's definitely far greater than peers. And in a cyclical business like home building, it is definitely a risk factor. And it mainly comes from that aggressive acquisition strategy I mentioned earlier.
Yeah, the cycle could turn really fast, and that's why it concerns me. I rated it a 6. Matt, this is where Matt and I really start to diverge. I've talked about the NVR comp, and I think it's overplayed. And they haven't used any debt to acquire land, but the corporate level debt is significant. If you look at it compared to its peers, particularly its largest peers, it is far more leveraged than those, and a lot of that's on a revolver. So I don't love it. One other thing too. The company likes to tout its high adjusted margins. That excludes two things that you just can't adjust out: commissions paid and interest expense. Those are real expenses. When you look at non-adjusted margins, Dreamfinder moves from one of the highest margin builders to one of the lowest margin builders. That's for gross margin and operating margin. And it doesn't get much more concerning about a business when what you tout says high, but what you actually produce that pays your bills is low. So you have to be really mindful of that.
All right, Jason, let's get to the big question on valuation. How well will Dreamfinder stock do over the next 5 years? And how safe is it, with a 10 being a sure thing, a 1 being a lottery ticket?
I don't want to say it's binary. I don't think that's fair. But again, the tailwinds are so good for home builders because a lot of the existing inventory is tied up by older homeowners that just don't seem like they're moving. And the other thing is that where people are moving to, even if that inventory started to open up, it wouldn't meet the demand. So the tailwinds are incredible. Focusing on entry level and first move up, that's a smart place to be. So if you're going to be an also-ran business, and honestly, I think Dreamfinders is kind of also-ran, make sure it's in an industry with strong tailwinds. Again, but the balance sheet, those concerns, the lower margin operations, those are concerns, the cyclicality, the balance sheet issue. So I rated a 5 on safety. So what I think is there's some chance investors, again, including me, you could lose money. But the potential offset here is the valuation's fine. And I think that does help kind of soak up some of the risk.
Geez, did Tyler Crow join the show? I gave it a 15% plus as well. I think you mentioned the focus on entry level and first move up homes. Yeah. There's an estimated shortage of about 3 million homes in the U.S. and roughly 1 million of those it's expected to be filled by single family housing.
Right.
The higher leverage is definitely a concern. The high exposure to Florida is both a positive and a negative, depending on how many storms you have in any given year. So I would give it a 6 for a safety in that regard.
Right, in the interest of time, we're going to skip Armchair CEO and go to everyone's favorite topic. Jason, is there a company in Dreamfinder's home space you like better?
Yeah, Meritage Homes. It does basically all of the things that Dreamfinder says they do. Steve Hilton, the founder, who's now the chairman, shifted the company 6 or 7 years ago from custom homes down to entry level and first move up. 75% plus of their land lots are held through options. So the balance sheet management is smart. It also pays a dividend. It's also still growing really quickly. And it also doesn't have nearly as much debt leverage. Oh, and it trades for 8 times earnings.
Okay, I'll walk back the Tyler Crow comment. He would have definitely said Green Brick. I would say maybe NVR, just because it's kind of like the company that Dreamfinders wants to be when it grows up. But the stock is highly valued right now. Jason mentioned there are some better valued home builders. But for me, Dreamfinders is a top 5 investment. So that should tell you. I'm putting my money where my mouth is on this one.
All right. Thank you to both Matt and to Jason. They're giving Dreamfinder's home an overall score of 7.5 out of 10. So I don't have to put my money where Matt's mouth is. But the financials and safety, these scores drag it down. But it's also a potential big winner if everything falls right for this home builder. But there might be better plays out there. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is a company that snagged the ticker symbol IT. Till then, Fool on.